Good day, everyone. My name is David Williams, Executive Director of the International Association for Energy Economics. It gives me great pleasure to welcome you to today's webinar entitled The Future of Gas in Europe and the Outlook for the Coming Winter. We are grateful to our moderator, Anna Verschnock, and our distinguished panelists for today's timely discussion. At first, a little bit about the International Association for Energy Economics. We are the largest association specializing in the field of energy economics and provide a forum for the exchange of ideas, experience, and issues among professionals interested in the field. The organization produces 2 professional journals, a newsletter, and holds conferences and virtual presentations, along with a host of other products and services that you can find at our website at www.iaee.org. If you're not already a member of the association, we welcome you to join. A few housekeeping matters in regard to today's webinar before I hand things over to our moderator. First, this webinar is being recorded for those that cannot participate in today's live event. If you have questions for our panelists, please use Zoom's Q&A button at the bottom of your Zoom window to type your question. We've allocated sufficient time at the end of this webinar to address your questions. And now it's my great pleasure to introduce you to our moderator, Anna Verschnock, who is the Executive Director of the Energy Industry Chamber of Slovenia. We also wish to pay special tribute to the Slovenian Association for Energy Economics for bringing about this webinar and sponsoring it today. Thank you very much. Anna, over to you.
Thank you very much, David. As you said, I work for the Energy Industry Chamber of Slovenia. And I hope you all feel all right, no matter from where you're joining us. It's now 10 o'clock Eastern time zone, but in Slovenia it's 4 p.m., so 4 in the afternoon. We want to bring to you a piece of energy from our capital, Ljubljana, where our chamber is located. And to give you an idea, our chamber is a member of 4 international organizations. And its section, Slovenian Association for Energy Economics, is linked directly to your organization. Now, who is here with us today? We have a representative of the Agency for the Cooperation of Energy Regulators, ACER, located in Slovenia's capital, Ljubljana, Mr. Denis Hesselink, here with us. Hi, Denis. We also have Mr. Götz Linke from Prisma, the European Capacity Platform, who is joining us from Germany. And all eyes now are on coming winter due to the hikes of the energy prices all over the world. However, today we will focus more on the future of gas in Europe and less maybe on the prices. As David said, we will be happy to take questions. So please, if you have any, type them in and we'll take them as we go. Now, the section SAEE, which is organizing this event, is one of the 6 sections within our chamber. And since 2015, it has been led by Mrs. Sarah Konowshek-Jezernik, the Deputy General Manager in Plinovodi. Plinovodi is transmission system operator for gas in Slovenia. Sarah, you have the honor being the first speaker, please.
Thank you, Anna. Dear participants of today's webinar, warm welcome on behalf of SAE, the Slovenian national affiliate of the IAEE. I'm sure some of you are already familiar with our affiliate, as we hosted successful European IAEE conference in 2019 in Ljubljana, together with the School of Economics and Business of the University of Ljubljana. Our specialty, compared to other national affiliates, is that we are also a section of the Slovenian Energy Industry Chamber. One of the highlights of our past work is the National Energy Economics Manifesto, encompassing a number of measures on how to improve our energy sector. Due to the changing energy landscape attributable to the revised EU legislation and the high energy prices, among others, SAE has launched the revision of the manifesto, which we hope to be completed and adopted in the coming year. We are also actively cooperating and organizing events with other associations in Slovenia, which are connected to the energy area. Among our most important tasks is without a doubt promotion of the research and dissemination of knowledge in the field of energy economics. Next year, we are planning to organize our third National Academic Conference, which will bring together students, academics, researchers, and business experts. We will also give the Best Student Paper Award to recognize and motivate the excellent student research in the field. We believe that with these activities, we promote the values and mission of the IAEE. Now over to the moderator of this webinar. Thank you.
Sarah, thank you for your introductory remarks. Now, today's topic is gas, more accurately, the future of gas in Europe. While energy supply is not at immediate risk and the markets currently expect wholesale gas prices to stabilize at a lower level by April 2022, security of supply, gas storage levels, and the proper functioning of the gas market need a particular monitoring ahead of the winter season. Natural gas, mostly imported, has been a mainstay of the EU's energy sector for decades, and with stringent decarbonization goals set to be reached already by 2040 and even more demanding goals foreseen for 2050, how will the European Union's pattern of natural gas supply and demand evolve? How will demand and supply of renewable gases, biomethane, synthetic methane, and green hydrogen develop? In a decarbonized future, what role can be construed for the existing natural gas infrastructure, and what new infrastructure would be needed? What evolution can one expect of gas system development instruments, and so on? What is the outlook for the coming winter? We'll try to answer some of these questions in the next hour or so. And our first speaker today is Mr. Denis Hesselink. Denis, hi. I will now briefly introduce you. You are the head of infrastructure, gas and retail department at Acer's, where you've been working for the last 9 years. Your work focuses on the monitoring of the implementation of the gas network codes, on issuing opinions, reports, and decisions on infrastructure, and of course on publishing the yearly market monitoring report. You are also a member of the Acer management team, and since 2016, the Acer representative to the Energy Community Regulatory Board. Now, before joining Acer, you worked for the Netherlands Authority for Consumers Market, and before that, you worked in its energy regulation department. You have a PhD in mathematics. Now, if I'm not mistaken, you have a presentation that will last about 20 minutes. Is that right? Good. Then, please, the floor is now yours.
Thank you very much, Anna, for the very kind introduction. Indeed, let me share my screen so you can all see the slides that I have prepared for the occasion. It's really nice to be here, even though virtually at the Slovenian Association for Energy Economics. Indeed, we are, as Acer, based in Ljubljana normally. We've been working virtually for the last, well, almost 2 years by now. But we do see Ljubljana, of course, as our seat. And we hope that one day maybe other organizations like Prisma could join us in Ljubljana, and we can have a real center for energy economics and energy regulation over there. For now, we'll do it virtually, and indeed, I will cover the 2 topics that you mentioned, Anna, in your introduction: the future of gas in Europe and the outlook for this winter. You had many questions. I'll not be able to answer all of them, but I'll at least answer, well, address, let's say, some of those questions. Let me see if I can move the slides here, which would be useful. That doesn't seem to work. If we're stuck here, then it's going to be difficult. Okay, let me share this again because this one doesn't work anymore. Let's do this.
It's working now.
I'm trying to get it on full screen, if that works, which worked when we tested it. Of course, not everything works the same way once you go live. Well, is this good enough, or should I try to still get it on full screen?
Yes, good enough.
It's fine.
Okay, good. So maybe for those who are less familiar with Acer, we were set up a bit more than 10 years ago. It is called the EU Agency for the Cooperation of Energy Regulators. And the reason is basically that we cooperate a lot with all the energy regulators. You see a number of them here as an illustration on the slide, which means that basically in the way we work, the way we do our analysis, our reports, everything goes through the whole chain of task forces, working groups up to the board level with all the 27 national energy regulators involved there. And that means that on the one hand, our process is sometimes a bit complicated and lengthy. On the other hand, it ensures that we are really very closely aligned with what's happening at the national level in all the member states. And it means that we can really benefit from all the knowledge and experience that all the national regulators have across Europe. So in a way, it's actually quite a nice way to create an EU institution which is still closely linked to what is happening at national level. Our main counterparts, if you can call it that way, in gas is NSRG, the European Network for Transmission System Operators for Gas. And they are similarly composed of all the gas TSOs like Plinovodi in Slovenia, and you see a number of other ones here on the slide. Our main bases are the Gas Market Directive and the Gas Regulation, all from 2009, which are actually at this moment under revision. And you mentioned, Anna, in your introduction, the whole decarbonization objective, the policy objectives there. That's exactly the reason why these legislation is being revised as we speak. And the whole goal would be to make sure that the way in which we function, the way in which energy regulation functions, is not only focused on efficiency, which is a classical goal of energy regulators, and on market integration, European market integration, but also clearly takes into account the goals of decarbonization and how to decarbonize in the most effective and most efficient way. I'll address the two topics actually in reverse order. So I'll start with the outlook for this winter, and then I'll move to the bigger topic of well, the future of gas in Europe, at least to cover some of those aspects. For this winter, what I can share with you is some views on the supplies and the prices. We don't actually do any kind of modeling in-house within Acer. So what we can do is looking at historical developments and trying to understand what has happened in the market recently, because the moment you understand the drivers of these, for instance, price developments, it becomes easier to understand what you may expect for the coming period. And what we've seen over the last month is really quite extraordinary. From mid-October, if you compare that to April of this year, electricity prices, to start from there, have increased by more than 200%. And yes, they were low in April, but 200% is a very significant increase. And that was driven by the main driver, at least, of that were the high gas prices, and they have increased by over 400% over the same period from April to October this year. That means something is really quite extraordinary is happening or has happened over that period in the market. And if you then move to if we then look at the chart below, what you see there are three price lines. The green one on top is the one for Northeast Asia, the LNG price index. The blue one or purple one in the middle is the TTF, the Dutch gas hub, which is the benchmark price for European gas prices. And for reference, below the red line is the Henry Hub in the US. And what you see is that the two top ones, so the Northeast Asia one and the TTF one, are very closely correlated and have been correlated closely over the last years, whereas Henry Hub is, well, hardly moving and is quite independent from what happens in Europe and Northeast Asia. The bars that you see, the blue bars, they indicate the amount of LNG imports into the EU. And what you normally see is if there's plenty of LNG available, so if the blue bars are very high, it pushes prices down because there's plenty of competition and prices are low. That's what you've seen over the last years, in a number of years, where there was sufficient gas available on a global scale, prices were low. And what we see now is basically the opposite happening. There is a tight global supply of LNG. There is more demand than supply, basically. And there's really competition between Northeast Asia and Europe, and to some extent Latin America, to get the LNG cargoes to come through those markets. And so you see over the last few months, the Northeast Asia price and the TTF moving hand in hand up significantly to try to attract those LNG cargoes which are needed for to supply the markets in Europe and in Northeast Asia. That was the main driver that we've seen so far to push up the prices to such very, very high levels. There are a few more who are secondary, but they're still important to understand the price formation in the European gas market. And one quite remarkable one is that we have, of course, pipeline imports from Russia, from Norway, and from Algeria, and a bit from Azerbaijan. They haven't actually reacted to those prices. I mean, normally, if you would see a very high price environment that we've seen over the last few months, any producer, any supplier with spare capacities, both on the production side and also on the transport side, you would expect them to jump at it and to really use the opportunity to sell more gas at a very high price. And that hasn't happened yet. It may still happen in the coming months, who knows, but it's quite remarkable that we haven't seen a significant reaction from the pipeline exports or imports into the EU over the last period. Next to that, we did have a very low storage level to start with. So the winter was quite strong the last winter, which means storage levels were low at the end of the previous winter. The summer-winter spread, so the price difference between the summer price and what you expect for the winter, was not very favorable to fill up the storages during the summer, which is a classical way to run the business. And that means that storages are really at a 10-year historical low as we speak in terms of filling up level. As of the 1st of November, the pattern of filling has changed, and there's now a withdrawal of storage capacities. And that means that we really depend on how cold the winter is going to be to see if the storages will still be sufficiently filled by the end of winter. There's also declining domestic production inside the EU. That is a well-known factor, especially in the Netherlands, where gas production is going down significantly. And then we, maybe not very appropriately, used to call the post-COVID demand recovery. It's not fully post-COVID, but at least, let's say, post-lockdown, we saw quite some demand recovery, which again was leading to more demand, and the demand-supply balance globally was one that's clearly affected the gas price levels over the last month, and it will continue, we think, to play a role in the coming period. If we zoom in a bit more on the changes in the supply patterns, we see that if we then compare 2021 to 2019, and the reason for doing it is because 2020 was a very exceptional year with all the lockdown measures. It's not an average year, so it's maybe not the best comparison. We see that overall there were quite significant changes. So if you look at the right, the decrease comes in particular from Russia and Norway, where significantly less gas was available, or was delivered, let's say, to Europe than in the past. Production in the EU going down significantly as well. And who filled up the gap? Well, to some extent, North Africa, Algeria, and Azerbaijan delivered more in 2021 until now than compared to 2019. But the big one were the storages. So really, the storages played a very important role in filling the gap that was left by less deliveries from the pipeline exports. And that means that they played a very important role so far, and we have to really follow what the delivery levels will be in the coming period, what the storage levels will be in the coming period. Let me see if I can move to the next one. What can we expect in the coming period? Now, Acer itself doesn't have an expectation about the market, but we can look at what the market itself is telling us. And that's simply looking at the forward prices. So the prices that you would pay nowadays for electricity or gas delivered in the future. This is publicly available information. You can check it yourself. Actually, I was checking it just before the presentation because these are the graphs you see here are from October, from last month. And I was checking to see if they're still reliable for the story at this moment. I was checking the gas prices, and the pattern, the expectation from the market is actually very much the same. So what the market expects at this moment, and it was the same last month, is that by between March and April next year, so basically when the winter is over, there is a significant drop of the forward prices, starting with the gas ones going down to below 50 euro per megawatt hour, actually happening both in Europe and also in Northeast Asia, the two ones you see in the bottom part of this chart. And then electricity has basically the same pattern because in many cases, it's gas-fired power plants who are setting the price for electricity. And that means it follows the same pattern again between March and April, significant drop in prices. So basically what the market expects at this moment is that the winter is going to be tight, at least tight in terms of high prices, but let's say by March and April, so by the next spring, this should be over and there should be a much more relaxed environment. If we try to summarize what we then expect, so at the moment, the way we look at the market is that we see more an issue of high energy prices and also high volatility, which is maybe more than what some people would expect or are comfortable with. Because you could also argue, well, high and low prices, if it's demand and supply, high volatility, that could be part of regular market functioning. And that's how some people would see it. At the same time, it makes the markets less predictable. It makes it maybe more difficult to run your business. It can lead to some real issues on the consumer side, if people are exposed directly or with some delay to such high prices and high volatility of prices, that we don't see an actual shortage of gas at this moment. We think the EU gas market design, so the way the market is organized with hubs, with trading places, with significant possibilities for cross-border trade, is resilient. The gas can easily flow across borders. It has delivered significant benefits to consumers over the last decade. And even if you take into account the last months, which have been difficult for sure, the total over the last decade is clearly beneficial for the EU consumers. So we see no reason to fundamentally change that, but of course you can always look at how to improve further the current arrangements. And one thing to look into there is this balance, let's say, between on the one hand the efficiency and the flexibility of market operations. So you create a legal space, a regulatory space where market players can operate, can buy and sell and trade gas and electricity as they seem fit in the most flexible and efficient way, and they take their own decisions in a decentralized way. And on the other hand, to have maybe some kind of insurance mechanism to dampen the price shocks. That's a matter of not only market functioning, but also to what extent is the whole environment, including the political part, are they comfortable with high price volatility? And maybe there's a collective value in saying, well, we need some kind of insurance, or we would like to have some kind of insurance, but we pay a price for a collective insurance to dampen these price shocks. One question put on the table by the Council and by the Parliament is to say, well, actually, would, for instance, a more harmonized storage regulation, would that support in an efficient way more security of supply? At the moment, we have national regimes for storage regulation. So we have some countries which have negotiated third-party access, some have regulated third-party access, some which have storage obligations, strategic storage, and others which don't have a way of pure market-based arrangement. That's an open question. I think we don't know what the optimal arrangement could be, and that's something we can look into to see if there's possibilities to fine-tune existing arrangements and make them more efficient overall. That's basically as much as I can say about the current winter, the way we see it, the main drivers behind the current prices, and to what extent they may continue. And I'd like to move now to the future of gas in Europe to share some trends and also some policy considerations. For us, there are two ways to look into the future. One is to look into historical trends and see if we can in some way extrapolate them into the future to see what may be coming our way. And the other one would be to look at policy initiatives. You see here Commissioner Simpson for Energy, who is working on finalizing the 10E regulation, that's for energy infrastructure, and also very importantly on a gas decarbonization and hydrogen package, which will come out in a month from now, and which should clearly steer the whole gas sector towards decarbonization. And of course, these policy initiatives are taken to influence the trends. I mean, if the trends were going in the right direction anyways, you wouldn't need the policy initiative. So to some extent, these historical trends and the policy initiatives may counteract or may at least move in different directions. I'll start with the trends just to show you where we're coming from and to see if that tells us anything about the future of gas. And then I'll move to the policy initiative, at least to tackle some of them and discuss where they may lead us to. If we look at historical trends, demand and supply, starting with demand, you see here in the chart the figures over the last 5 years, gas demand split between gas for power generation and other gas demand in Europe. It's difficult to see a trend other than saying, well, actually over the years, yes, it varies a bit from year to year, but actually it's quite stable on the demand side. There's no big change in terms of higher or lower demand. And yes, there are factors at play like emission allowances, coal to gas switching. But overall, if you look at the total number across Europe, across all uses of gas, it's actually quite stable. If we zoom in a bit more on the demand developments over the last quarters, you see how much this is influenced if you zoom in a bit more by specific events. For instance, the lockdowns that we had in the second quarter of last year, you see a clear drop in gas demand. Then the lockdowns are easing. You see a quick recovery by the second quarter of this year. Quick economic recovery, there's an end to the lockdowns, there's more economic activity, there's coal to gas switching, so really significant increase of gas demand. But then there's a shortage of gas globally, as I showed you before, prices are going up, and then demand is affected again, at least to reduced consumption, and in fact, even some demand destruction, and gas demand goes down quite significantly. So on the short term, quite some big changes, but in the long term, if you look at the years and you sum everything up, you don't actually see big variations in demand until now, at least over the last years. On the supply side, I spoke previously about the LNG and about the pipeline suppliers. This is what it looks at the moment. So where does the gas supply come from? There's a bit of EU production, which is about 18%, going down quite significantly. That's the one thing we know for sure. And all the rest is imports. And that's something which some politicians are uneasy with. They think the import dependency is too high. There's, of course, a big import from Russia, around 32% of the EU demand. Then Norway is a big one with 22%, and then the rest is a bit from Algeria and quite a lot from LNG. As long as the sources, let's say, are diversified and there's sufficient choice of where to get the gas from, that doesn't have to be a problem. But it's very clear that the import dependency, if you look at natural gas only, will only increase in the coming period, and that may not be to the, let's say, the wish of many politicians. One thing which is really clear and which is an anchor for the policy initiatives is the carbon emissions. And here what we track is the total carbon emissions of the gas sector over the last years in Europe, well, EU and UK. And the blue line, which starts at around 1,000, is to look for. That's the total emissions from gas-fired power generation. Of course, there is an effect here between to what extent is a switching from coal to gas, to what extent are renewables coming in, and over time, the emissions caused by gas-fired power generation have actually increased a bit. And that's a very clear policy point. These have to go down to zero. So there is clearly something where the trend, if you see a trend here, which is probably going up slightly, that needs to change and needs to change rapidly and significantly. And that brings me to the alternatives. What are the alternatives then for gas, low carbon, decarbonized gases inside the EU? One is biogas and biomethane. And there, if we look at the numbers, how have things developed over time? Well, they're growing significantly. We see a doubling of the volume of low carbon gases in the last decade, but they started from a very, very low base. So at the moment, we're speaking about biogas and biomethane accounting for about 15% of EU domestic gas production, which equals less than 4% of EU gas consumption. So less than 4%, that's a limited amount, but it's growing. So there's still some potential. What you should also realize here when it comes to biogas is that most biogas actually is consumed very close to the production site. So the moment it's still not up to specs, up to specifications for injection into the transmission or distribution network, you can use it locally and it's actually cheaper. If you then upgrade the biogas to biomethane, that is much lower because the costs are higher. You have to make an additional investment. But of course, it gives you more possibility. If you can't use it locally, you can at least share it with a distribution area or maybe even a bigger area. If we look at the European Biogas Association, they tell us that they expect the production inside the EU of biogas to double by 2030 and to, in the end, maybe cover something like 25% of EU gas demand. That's maybe a bit optimistic, but it shows you, let's say, the order of magnitude of the potential that biogas as a carbon neutral gas, if done properly, could have. The other big one that is on the agenda for policy initiatives is hydrogen. At the moment, again, just looking at the numbers where we are now, hydrogen production is very moderate compared to the future expectations. It's less than 2% of the energy intake. Electrolysis produces less than 3% of that hydrogen inside the EU. So that's a very, very small point. The biggest part is just conventional steam methane reforming. So you take natural gas, you take the process of steam methane reforming, normally without carbon capture and storage. So it's not carbon neutral at all. But that's the way hydrogen is currently produced. And the main users at the moment are oil refineries and ammonia production facilities. That's the current state. The plans, of course, are much bigger. So the plans would be to have hydrogen equal around 13% of the EU gas consumption by 2030, and then have, especially in the plans of the Commission, green hydrogen, so produced from renewable electricity with electrolysis, and then having green hydrogen in there. There is quite some debate inside the European gas sector on, and also with the NGOs actually, on how realistic it is and how desirable this is. So yes, you can use hydrogen. Yes, it can be green. it requires a significant amount of renewable electricity generation to produce the green hydrogen. And the question is it always the most efficient way to do this? And that's something which is actually still quite open for debate. What we see here is very different visions of the future. On the one hand, we see, and it's to the left on this slide, a study from Agora Energiewende, looking at the role of hydrogen in the energy transition and saying, well, actually, yes, we need hydrogen for certain uses, especially industrial clusters will need it because for them, it's basically the only way to decarbonize. That would apply to steel, cement, heavy industries, which are difficult, if not impossible, to electrify. And if those clusters are geographically close, it actually makes sense to have a network, a transmission network for hydrogen, which in those areas would actually resemble something similar to the current natural gas transmission system. And you see here to the left how they depicted that, saying, well, there could be a cluster in Northwest Europe, maybe one in Spain, maybe one in Southeast Europe, one around Poland, the Baltics. And there could be a few clusters, but they don't see a need necessarily to connect all those into a European grid. To the right, you see a very different vision of the future that comes from the gas TSOs. And they have a different view. They say, well, actually, what you can do with hydrogen is great. You can use it in very different sectors to decarbonize the use. And we, the gas TSOs, can deliver a network of hydrogen transmission pipelines, which actually, if you look at the map, looks very similar to the current natural gas system. One of the claims they made, which I think is correct, is that repurposing natural gas pipelines for use of hydrogen is much more efficient than new build of hydrogen pipelines. That is, I think, quite clear. The order of magnitude is quite different. The open question behind this, where do we need hydrogen and where is hydrogen an efficient way to decarbonize? And there will be more competition, and there should be more competition between different ways of decarbonizing various energy uses. And it's not clear that hydrogen will always be the answer. The final word on regulation and what role regulation could play. We have a number of publications together with CER on how we see the role of regulation in this decarbonization context. Our overall goal, the way we understand the policy objective, is that regulation should be there to facilitate efficient decarbonization at lowest cost. So classically, regulators are focused on efficient cost for network operators. And here we would apply, let's say, a similar approach, saying there's different ways to decarbonize. And the goal for us would be to make sure that the regulatory system delivers that solution, which is the least cost way to decarbonize any particular use of energy. We think that overall, if you were to get to a certain, let's say, hydrogen or this low carbon gas system, which resembles the current natural gas system, it makes a lot of sense to have all the main principles of regulation. I mentioned at the beginning this, the third energy package, the gas regulation, the gas directive from 2009. They have all the main principles that we've been applying over the last decade, and we know that they work. That's about unbundling requirements. It's about regulated third-party access, non-discrimination, transparency, cost reflectivity, all that we think are sound principles. They've shown their value. They've shown that they can be implemented at national and European level. And if you get to some kind of interconnected system, we think all of them should apply, regardless of the gas, basically, whether it's low carbon gas, natural gas, hydrogen, doesn't really matter. What we do see is that hydrogen in particular will need to be built up over time. It's at the moment very limited. It will need probably some more flexibility in the beginning, and probably you shouldn't start regulating something which is really small and limited in outlook. So there we see room for more flexibility to make sure that in the beginning there is more room for investment to take place. And once the sector really takes off, then you can move towards full regulatory systems. That's a bit of an outlook for how we see the coming policy initiatives and how they would influence the gas market in the future. It's not a full, let's say, image of what it will look like, but I think it shows you some of the main factors which will influence the shape of the European gas market in the future. So that's, I think, for an introduction, hopefully enough room, enough material to think about and to discuss here. So I'll stop here and I'll come back to you, Anna.
Thank you very much for your presentation regarding the outlook. Now you spoke about supply, price levels, the role of storage, and stress that tight market conditions are expected to relax in spring. When talking about the future of gas, you mentioned demand and supply developments and also the role of biogases and hydrogen. Now, you said that the gas prices reflected record volatility. Do you expect a similar volatility in the future as well?
We don't have specific expectations about volatility. We see what's happening in the market. We try to understand what is driving it. And sorry. It means that as long as those drivers are present and nothing is fundamentally changed in the market structure, in the way the market operates, yes, this could come back. Of course, we should realize that at the moment, there's no, let's say, drastic change in the market setup. There have been quite some investments over the last years on two sides. One hand, in infrastructure investments to make sure that the European markets are much better interconnected. And that plays a role in making sure that there's, let's say, no isolated areas when it comes to volatility. So previously you would have more isolated parts of Europe, which were much more vulnerable to this volatility. Now we see a volatility across Europe. So all prices basically go up and go down in the same way or in a very similar way. And that's a result of market integration. The other thing is on the, let's say, the software side, where we have harmonized quite a bit the rules and regulations under which shippers and traders can use the European gas system. And that means that there's more possibilities for trading. And normally, I mean, trading, of course, has different sides, but efficient trading should lead to, to the best possible way of matching supply and demand that should play a role. It doesn't mean that volatility will disappear. It can still come back.
Okay, thank you so much. Now I will introduce our second guest, already announced in the introduction, Mr. Götz Linke. And then we will continue debate together, because the first question is actually already here from the public regarding Acer. So I will then invite both of you to answer. So Mr. Götz Linke has been the managing director of Prisma, European Capacity Platform, for a decade. With almost 20 years of experience in the energy sector and passion for innovation, he is currently committed to the strategic and operational development of Prisma, the leading platform for gas capacity trading in Europe. Before joining Prisma, Götz was the head of market regulation at Alpiq Trading and prior vice president market regulation at E.ON. He also worked for Centrica and for Duke Energy in the UK. Mr. Linke holds a PhD, but I don't know from which field.
The field is actually also in the gas market. So I did a comparison study about the liberalization in the Netherlands, Germany, and Austria. It's a long time ago.
Thank you for the clarification. And now we will answer the first question from Paul Messerschmidt, who is asking, who are the member states of Acer?
So, I think this is a question. I think this is a question for Dennis.
Exactly.
I'll pick it up. I mean, we don't really have member states, but we have, let's say, the national regulators who are part of the Acer organization. And those are simply the same ones as all the EU member states, so the EU 27. Every member state has a national regulator. All the national regulators are inside Acer. And next to that, we have some observer NRAs who participate as an observer in our proceedings. So for instance, the one from Iceland is in there and a few other ones, but that's quite limited. The key ones, let's say the ones who are full member, are all the 27 member states of the EU.
So regulators from member states.
You can actually, for Mr. Messerschmidt, you can find it on their website. There's actually quite a good list and you can find all the relevant people. Just as a side note, because I was just looking at it. And so I never looked at it before, but you can find it there. It's really helpful.
So thank you, Dennis. Now, Mr. Götz, what is your view on the developments and trends in relation to the gas sector? What can you say about that?
Yeah, before I start, thanks Anna and Sarah for inviting me. Although it's 20 to 5 in Germany, I'm still happy to talk about this fundamental stuff, and great, Dennis, to hear your viewpoint. So it's motivating to speak in a larger community about our future. So that's great. So thanks both of you, Anna and Sarah. Two words about Prisma, because I realized from the question that I see that maybe some of you don't know it too well. So I will make it short in a nutshell. So Prisma is a capacity gas capacity marketing platform. We cover roughly 19 markets. Quite lately, we are now also, apart from the European markets, we also now connect North Africa. So that's it's a big success. I think this has to do also with the trends of, that even investors and shippers are now looking in the north of Africa. Also, what Dennis was describing about hydrogen market, that production needs to be found somewhere also outside of Europe. So that's a recent success we have. We are also in discussion with other. For instance, lately we are in negotiation for a connection between Greece and Bulgaria. So we are also in the east, but also in the west, and covering quite a large market. We're marketing roughly 1,800 points. We have more than 50 operators, SSOs and transmission system operator, and we have roughly 3,500 users, which is quite big for the gas market, at least in Europe. And I think that's a big success for Dennis and his teams, that market liberalization is working in that sense. Because if you look like 15, 20 years ago, I think you would not have seen this. So we would have looked at a total different market. So, Anna, you asked me about what is my viewpoint on the current development. So we've been also obviously looking at it, and it's quite interesting that in this change of the market regulation, we have seen that shippers have let expire, for regulatory reasons, but also other reasons, long-term contracts. So we are actually in the middle of a completely paradigm change. And I think that's has been also one of the triggers, that going from long to short term, because there was always capacity available, but there was also gas available at a very low price. Actually, last summer, we spoke the first time about negative prices also in the gas sector. The platform had to change, our platform, but also the suppliers tries to say eventually have negative prices, which we only saw in the electricity market. So now we have a high volatility and changing, and that's one learning, paradigm change from long to short term, but also to accept that there might be a shortage that nobody expected before. So maybe, Dennis, we can discuss this and pick this up later on why this happened. So bookings are not focused on long term, rather on short terms. And you see that also, that shippers have been optimizing also the way they use capacities on the Prisma platform. So rather short term. We went 10 years ago from the yearly auction, where the most important auctions throughout the year, now very short term. So that's also the perspective that how markets have reacted. And now you see the peaks and crazy price spikes to one or to the other end. So that's an interesting development in general. So going back to the general question, the general trend, so that's a market behavior, but you also see the importance of gas. In many markets, coal potentially will be phased out. Nuclear has a revival maybe in the coming years, but gas is a bridging technology. And you see the discussion around how can gas become more influential also in these decarbonation periods. So that's another trend, that gas in general has been perceived quite well. You see that also on the investor sides. Mm-hmm. So lately, one of the Prisma shareholders was sold to one of the largest infrastructure funds in the world for more than 1 billion euro. And there's a significant still interest on the financial markets to buy into infrastructure. So that's another interesting trend, that investors are looking to buy into infrastructure. It's still a very interesting business out there. And that means also the confidence in infrastructure, just as gas infrastructure. So we could this could fill 3 webinars, but that would be my first answer to your question, Anna.
Thank you. Dennis, maybe you can add something to this paradigm change.
Yes, thank you. I was just looking at a slide back to see if I can show what Guts was talking about, because in fact, indeed, we see significant changes in the way in which bookings have been made, and it of course is linked to trading possibilities. So I'm just trying to see if I can find it here. Yes, this is the one I was looking for. Sorry to do it live here, but I think this can actually help to understand what is happening.
I can maybe help you. I have the slide more or less. But you have it. Okay, there it is.
So we see indeed, what you see is the expiration of long-term capacity bookings, the green line going down here. This is, so overall, if you sum up all the firm capacity in transmission systems in Europe, gas transmission systems, you have the technical capacity on the top, that's the blue line. You have the long-term contracts, which were the traditional ones. Gits was speaking about the European gas market 15, 20 years ago. At the time, there were long-term bookings. So the bookings were made for, I don't know, 15, 20 years, normally with an oil price indexation. And there were very limited possibilities to trade. So the gas came in one location with a certain price, and basically that was it, take it or leave it. At the moment, and that's the red line that you see, those are the capacity bookings made through platforms like Prisma, like the one that Gits is leading, where capacity is offered on a transparent basis, a non-discriminatory basis, and anybody who wants can book the capacity for a day, for a week, for a month, a quarter, a year. Those are all standard products available. And what we see, this is a deliberate result of European policymaking that over time, and it starts very, very small in 2016 here in the chart, with very limited capacities booked on a short-term basis. But by now we are at the point, well, end of last year in this graph, where actually the short-term capacity bookings are overtaking the capacity bookings from the long-term contracts. It takes a long time to get there, but if you have the design right and a full implementation over time, this is a structure which delivers, and that creates the trading possibilities. So when I spoke before about TTF as being the benchmark price for European gas prices, about the possibilities to trade gas, to flow gas easily across borders inside the EU, this is behind it. This is one of the factors behind it, where it has been made possible to move away from the long-term contracts, to have a transparent process through auctions, where any shipper who needs capacity can book it for as long as they want, and they pay a market price. And that's really, let's say, a technical work in the background, which is very useful and necessary, actually, to get to the current gas market design.
Yes, now we continue with LNG. Maybe the LNG supply has risen its significance in last years, but total import volumes are becoming more volatile. Any additional thoughts maybe on this?
Also here, we can see that the supply situation has been changed as a trigger for a higher LNG need. The situation between, let's say, Africa and south of Europe, where significant volumes were transported and now have to be covered by LNG, for instance, in Portugal and in Spain. So we are in a global market. We're in a global competition. And here I'm also fully in support of Dennis. We can only be competitive worldwide if Europe is sticking together and not each market is just looking individual. So we have to work together in a certain way, standardization. But I think what's needed, Anna here, is also and this is something Prisma is also looking at, is that the change of the products that we have. I think we need more frequent and flexible products, because the CAN network code, which is the basis, for instance, of our platform, it was designed 10, 15 years ago, and now it's in a completely different dimension. And I think that that's a higher need also from the market, and LNG is one vital. So how do you actually land an LNG ship, and how is it deboarding, and how is that happening? And in particular, if we're looking at decarbonization, how these different mechanisms actually work together. So there will be also lots of discussion in the coming years on the market design, I would say, and to be attractive for investors. I think that's in the end also vital, to be attractive for investors.
Mm-hmm. Now, maybe if we move now to gas storage, because you said that EU has to work together, right? While the current level of gas storage in Europe is a bit tight, on today, I checked today, it's 73.47%. And last year on this date, it was 92.47. So 93%, 73%. but it seems adequate to address supply risk in a winter similar to the previous one. Yet the evolution of the weather during the winter season is a key variable to watch. Now, what do you envisage if the winter is really, really cold and long?
Yeah, that's a modeling question, basically. I mean, I can't predict the future here and tell you what's going to happen. What we would, let's say, overall expect is that if the winter is colder than usual, there should not necessarily be a supply situation, but of course it will affect prices. If we need more gas than what we can get from the LNG markets, pipeline imports and storages, or we have to withdraw more from the storages than usual, there will be a price to be paid. And one thing technically, which is important to keep in mind, is that in a storage, the way a storage facility operates, if the volume in the storage goes down, it becomes more difficult to extract the remaining parts from the storage site. So in the beginning, when it's almost fully full, it's easy to extract gas from the storage site, but the moment the volumes become very low, it becomes more difficult to get the gas out. And that means that the deliverability of the storage facilities towards the end of the winter, let's say towards February, March, that could become a bit of an issue. So overall, yeah, a cold winter is more difficult, obviously, and we need to ensure that there are sufficient supplies available, and that becomes in the end also a matter of price.
Mm-hmm. Good.
Yeah, I mean, the favorite topic, storage. I mean, there have been years where people say if you own a storage facility, you're absolutely crazy. I really seriously, Anna, when we're looking 5, 6, 7 years ago, I was working there for different companies where they actually thought about closing storage facilities. Now it's become like a diamond, in particular if it's full of gas. So the paradigm change is there, the volatility is there. So I fully align with Dennis. Yeah, it's in the end a matter of price, but also a booking behavior. So, you know, if everybody thought there's always enough available, forgetting that we are in a global market. I mean, now it sounds a little bit crazy because I'm sitting here and say I know everything, but that's not the key. But you know, it's about hedging your position as well. And I think some were quite unprepared. Some were extremely well prepared, and you know, they are also gaining out of this. So I would say the matter of security of supply, that's in the end what we are talking about. Do we have a supply problem? I would agree with Dennis, not necessarily, but I think there's a price situation and there's a political discussion, that's for sure. I mean, I think some of your questions are relating to that, right?
Yes, exactly. I will have now two in this regard. First, we all know that the European Commission presented the toolbox for action and support a month ago. Now, talking about coordinated measures, and how can a more effective functioning of gas storage across the single market be achieved? What will be the role of solidarity arrangements between the member states? This is one question, maybe Dennis for you, or good. And then I have another one.
I give the question to Dennis because that's a tough one.
Thanks, guys. Maybe on the solidarity mechanisms, that's a very specific arrangement under the gas security supply regulation, where it provides for the possibility for 2 or more neighboring member states to agree on this so-called solidarity mechanism, which means that if one member state is in trouble, they can call upon the neighboring member state to say, listen, I need additional gas now, and the neighboring member state would supply that under certain conditions, including under a certain price. And so we have at the moment one solidarity mechanism in place between Germany and Denmark, where they have completed negotiations and there is an agreement, so Denmark and Germany would help each other if need be. There are more being negotiated now, not finalized yet, but of course it's difficult to foresee what kind of situations would one member state call upon the other one, and what would they be willing to pay if the situation is really very difficult. But that's something which well needs to be negotiated at member state level between neighbors to see if they want to have this, let's say, insurance mechanism in place, but of course also to pay the price. So that means that if one member state has invested more in, let's say, storage capacity, and therefore they can deliver more, well, maybe there's a price that the neighbor would have to pay if they really need these additional gases in moments of need. When it comes to storage regulation, I mean, that's a bit of an open question. We see quite different approaches between member states, some with negotiated third-party access, some with regulated third-party access. And for me, it's an open question if there are possibilities to improve the overall design of storage regulation. So the access regimes basically to the storage sites. We see at the moment, and that's quite remarkable, quite different filling levels of different storages, quite low by one operator in the Netherlands, Germany, and Austria, and let's say in line with usual market behavior in all the rest. And that's something to look into.
Mm-hmm. And now another question concerning member states and also third parties. Now gas supplies are increasing across the Nord Streams, decreasing across Poland and Ukraine corridors, and increasing via Turk Stream and TAP. Now, the International Energy Agency has called on Russia to increase its natural gas exports to Europe, right, in order to help alleviate rapidly rising fuel prices. And the agency noted that Russia is fulfilling its long-term contracts. Now, what is the relation between Russian decisions and the not yet certified Nord Stream 2 pipeline?
I would go for the telephone joker on this question, Anna. So I don't know who's volunteering. Maybe the telephone joker is Dennis on this one, because Anna, here I'm struggling a little bit to answer. I mean, I have a personal viewpoint, which I don't want to share with everyone, because I'm representing now a large group of owners that have a different viewpoint, and this evening I still want to have a safe bike ride home. So I go for the telephone joker, and maybe Dennis has an opinion.
Well, I'm not here to share the opinion, let's say, but to share what I can do from the Acer point of view. I think here, I mean, formally, there is no link. There is a procedure to approve, which is now running through Bundesnetzagentur, so the German NRA, to see if and under which conditions Nord Stream 2 can start operating. That's one procedure which is not linked to Russian flows coming in or not coming in through certain routes. What is happening on the Russian side, so the way Gazprom decides to flow more or less gas through one route or through the other, and actually TAP is not Russian gas, TAP is from Azerbaijan. We don't know. I mean, we don't know what the considerations are on the Russian side. What we can see are the bookings, are the flows, and there the transparency in the European gas market has increased significantly. We know that flows from Russia at the moment are going down. We know that bookings for December for Russian gas are very low, if not to say non-existent along some routes. That's the result of Russian decisions, of Gazprom decisions. What is behind it? I mean, we don't know. I don't want to speculate about why they have done certain things.
Okay, thank you both for an honest answer. And
Anna,
now
but I think we can say one word about this, which I find very interesting. You talked about TAP, you talked about the Baltic pipeline, you talked about Nord Stream 2, a significant infrastructure investment over the last 3, 4, 5 years. So the good thing maybe about this situation that actually the investment that have been done pay off to a certain degree, that there is demand. So that the investments that are done in security of supply to safeguard a safe, in the long run, a safe security for Europe will pay off. I mean, now we're going through the deep that also had to do a lot with the post-COVID situation, like Dennis explained. So there's hope. There's hope that the investment and the flows to Europe will increase, and that policymakers also pay more attention to this situation, that it actually makes sense to give, a transmission system operator the relevant incentives, to build and to increase storage. By the way, that's extremely important for the decarbonization process, to have enough financial incentives that actually investors come to Europe and pay and invest into the future. So sorry for So I didn't be the telephone joker, but there's a wider picture behind it.
Now we have a question from Bruno Leray. He's asking, Asia is not reach of storage facilities. Do we have to fear that gas stored in Europe could be sucked by Asian consumers?
Gut, do you want to take this one? I'm not a specialist on Asian storage facilities, I have to say.
Me either. I've only been once in Asia, so I would say no. But I cannot really.
Okay, thank you for this.
I mean, what I can say, maybe I can't answer the question directly. I don't know about storage facilities being there or lacking in Asia. What I do see is that not only inside the EU, but also in neighboring countries like Ukraine, where they're applying one-on-one the EU energy acquis, so that the legal framework from the EU, there are significant storage facilities which are now made available to EU shippers. So if you're a shipper inside the EU, you can quite easily store your gas inside Ukraine. They have significant facilities available there. And that means that the possibilities we have inside the EU to store gas are quite a bit larger nowadays than they were even 2-3 years ago.
And now the question for the future. In decarbonized future, are we going to need a new or adapted gas infrastructure?
I think what we need in the first place is to have a process to assess what is the most efficient way to decarbonize. So I wouldn't start from the existing gas grid and say, listen, we have this gas grid, what should we do with it? But I would start the other way around, say, listen, we need to decarbonize the overall energy sector. What is the most efficient way to do it? And as an example, to make it more concrete, I think heating in houses is quite an interesting example. At the moment, in many parts of Europe, heating is done through gas appliances, gas boilers, and there's a connection from the houses to the distribution grid, and that's the way they heat their house. If you start from the gas grid, you say, well, you know what? We could actually also distribute hydrogen instead of gas, natural gas. We can repurpose our grid with a limited cost, limited investment, and then we have hydrogen flowing through there. That is a way to decarbonize, but it may not be the most efficient way to decarbonize. And if you look at it from the other way around, say, okay, we need to decarbonize heating in homes. What can we do? We can do energy efficiency first. We can make sure these houses are better insulated and use less energy. And then we have basically a competition between heat pumps and insulation, maybe district heating, and maybe hydrogen. And then let's look for an overall area. This will be done, I guess, at local or regional level, not at national and certainly not at European level. What is now for this particular city, let's say, the most efficient way to decarbonize? And that may or may not require an adapted gas grid. I think that's the way to look at it. And that means that in some cases, there may still be a future for European gas grids, and some in the end may end up being stranded and not needed anymore.
Maybe can both of you say what risks and barriers do you expect on the road to 2050? Maybe if you point one or two things.
I think starting maybe with a surprising one is also the acceptance that, you know, situations like this, like high price uncertainty, have to be accepted, and that policymakers are strong also through the process. So I see the biggest risk is the stability in also a political system, because for investor it's absolutely needed stability. So, you know, you cannot shift from one day to the next. Nobody will put money into a society that's, you know, switching from one opinion to the next. So I think that's really, really key to, so a common vision with a common strategy, how to overcome it. Nobody will do it perfect. Like that's the very top level. But then I think we need a bouquet of measures over the years. So you cannot just say we will do hydrogen only. This will never work. So we, like Dennis said, we will start with the normal people and looking at the wider infrastructure. So a new design and adoption, more flexibility is needed. So there's lots of stuff needed, in particular innovation, and that's needs also stability, political environment.
Thank you. Dennis?
Yeah, I support good. So we haven't coordinated this before, but we happen to have the same view here. I think really on top is the managed transition. I mean, this transition will not be easy and will not be cheap, and to keep steady, to make sure that we have a political course which is supported throughout at European and at national level, and that people keep the bigger goal in place and understand that there can be hiccups along the way, but we have to overcome them and not give up the first moment that something becomes more difficult. And there will be parts which are, well, which not go as foreseen. There will be difficulties and maybe some volatility of prices, but to remain true to the overarching goal, but to manage it in a way that it becomes affordable and that people can support the way to get there.
Anna, Anna, maybe the final words, what I realized also in the last, let's say, couple of months is communication. You need to convince people why you're doing this. Nobody will put a cent into anything if they're not convinced of what we are trying to achieve together. So it's not one company can solve, it's only the community together. And actually that could be the maybe the competitive advantage of Europe, because we bring different dimensions together, but that's at the same time the challenge. So you need to convince the people, because otherwise they will vote with their feet, as we call it in German, and they will, you know, vote for different people, and then this whole climate target is, you know, never achievable.
Yeah, you are completely right. I mean, I completely agree that communication is vital. Now, just for the audience to to communicate to them what we have agreed prior to this event, because there are so many interesting questions, we will actually prolong for a couple of more minutes this debate. So we have now 2 questions from the audience regarding Nord Stream 2. So we will take them, or I hope that you both will be able to say something on that. Our actually vice president of the SAEE section, Nevenka Frovatin, the professor from University of Ljubljana, is asking, is the EU requirement that the third-party access should be applied to the Nord Stream 2? This is one question. Maybe we will start with that.
Dennis is the top regulator in Europe, so he should answer this.
Yeah, my understanding is that, I mean, we were not involved in the process, but we understand that the way the EU legislation has been amended means that indeed, at least for the part of the pipeline which enters into the, let's say, EU territory of the offshore pipeline, that now also the third-party access requirement applies there as well.
Mm-hmm.
That's why the certification process has to be done, so so it falls at least to some parts under European regulation, also the way of marketing capacity.
Mm-hmm. And now the second one from Anton Berezutsky. Are any publicly available records regarding the consultations BNetzA has with the stakeholders from Poland, Ukraine regarding Nord Stream 2? Policy positions, meeting records, and so on?
I don't know, to be honest.
I don't know either, but if there's a consultation, which I would imagine, it will be done as a general consultation. So it would not be done only with Polish and Ukrainian participants. It will be a general consultation. Anybody who has an interest would be part of the proceeding. And I'm pretty sure there's some public documents on the website of Bundesnetzagentur, maybe in German. Not sure if they're in English from the beginning, but I don't know for sure what is available at this moment.
Okay, thank you. Now, since our topic is the future of gas in Europe, we will now end our debate with the next question for the ACER. In which phase is the revision of EU rules on market access for gas networks?
Well, it's in the final phase of preparation. So it's the Commission who has the right of initiative. They are reviewing the gas directive and the gas regulation as we speak. It's going through the internal, let's say, deliberation process within the European Commission. And they have indicated that their deadline for presenting it is mid-December. So by mid-December, we should all see the proposal on hydrogen and gas decarbonization, which is basically updating the whole legislative framework to bring them in line with the decarbonization goals. That's not the end of it, of course, because then you have a proposal for European legislation that has to go through the Council and the Parliament, so through the Member States and the MEPs. And they will discuss, well, to see what their views are, if they support it, if they want to change anything. And that can still take quite some time, because in the end, the two co-legislators, the Council and the Parliament, have to agree before it becomes binding EU law.
Okay, thank you so much. Götz, you want to add something?
No, just for the person who asked about this Nord Stream 2 consultation, you can find at least some parts on the website of the German regulator, Bundesnetzagentur. I can maybe put this in the chat if you want.
In the chat, please,
yeah.
Please do.
Just...
Dear Dennis and dear Götz, I really want to thank you for your valuable contribution to our understanding of the future role of gas in Europe. The time is now almost up, and I will now ask our dear Sarah to have final words to conclude this debate, and then we will hand it over back to Rebecca. Thank you so much, Dennis and Götz. Thank you so much.
Thank you, Anna. And to all, it was very interesting to listen. Also in Plinovodi, we are a Slovenian transmission system operator for gas. We are active player in the infrastructure services market. I think it is clear now that the gas will be part of the energy mix also in the future, for decades to come. We follow and support various projects in the field of renewable gases and hydrogen as much as this is possible. This year, we also joined the European Hydrogen Backbone Project, which was already mentioned before, which assumes 40,000 kilometers of hydrogen pipelines across more than 20 participating countries by year 2040. Almost 70% of the hydrogen pipelines are planned to be repurposed from already existing natural gas pipelines, thus dramatically reducing the investment cost. Gas can be stored much cheaper and for longer periods of time compared to the renewable electricity from sun and wind, which needs to be stored for winter times. These and all other energy economics related issues will be addressed next year at the SAE Third Scientific Conference under the patronage of the School of Economics and Business, University of Ljubljana, and you are all welcome to attend. We especially wish that Acer will again share its view on the themes on the agenda. If you have any questions, we are available on our contacts. Thank you.
Thank you. Thank you, dear speakers and participants, for contributing to a successful event we had today. We have heard that the EU gas market design proves resilient to accommodate flows in response to short-term signals. We have heard that the high gas prices of 21 have made renewable gases more competitive in relative terms, and reliable price signals are needed to drive investments. Acer is committed to fostering the decarbonization at least costs of the energy sector in general and of the gas sector in particular. Also that the gas system will continue to exist after 2050, but it will keep pace with the times. Also that we are witnessing the digital transformation and the energy transition. And we also got a glimpse of an advice about how good we have to be when communicating all this. Last but not least, every meaningful change arises from the people. So we, the people of Acer, Prisma, and the Energy Industry Chamber of Slovenia, proudly brought a piece of the European energy to all of the countries you are watching us. By connecting the energy organizations, we are definitely creating a common vision for an advanced low-carbon society. Our kind regards go to all of you who took the time and joined us today. Have a nice Friday and goodbye to you all. Rebecca?
IAEE wishes to thank Anna Versneck, SAEE, and our distinguished panelists for an outstanding webinar. This webinar will be available on IAEE's website for future download. If you're not a member of IAEE, we encourage you to join by visiting www.iaee.org. We thank you for attending, and I officially close this webinar.